So today, as I mentioned, I'll be taking you through market structure. And first of all, we have to understand what is market structure. So after knowing what is market structure, we can at least understand how the market moves or what patterns do repeat itself in the market. So as I will start by the definition of market structure. Market structure is the way price moves on the chart. It shows whether the market is going up, going down, or sideways. Basically, is the movement of price from maybe if the market is going in an upward direction, or maybe it's going on downward direction, or maybe the price is going sideways. So I'll start with the uptrend. That is the type of market structure. So the uptrend is basically price is moving upwards. The market is making higher highs and higher lows. When price pull back, simple rule, in an uptrend, traders look for buys at a higher low and take profit near higher highs. For example, when price is going up, then pullbacks. So traders usually look for buys within the higher low around this zone and target the higher highs. You just buy from the higher low and target the higher highs. Am I clear? Seems I'll need to log in with my
Very
phone.
clear, very clear.
Okay, so
Oh,
that's what an uptrend means. And also, when somebody says an uptrend from the candlestick anatomy, you know that a bullish candlestick means buying, a bearish candlestick means selling. So, in order for on a buying market, which is going on a high, high lows, high, high lows, high lows. That means due to the bullish candlestick forming, this means that the bulls are in control. So this market, will call it a bullish market. Uh, so the main thing you have to understand is the terms. Eventually, for the beginners who are here, bullish means buying, bearish means selling. And so now I'd like to go to the next thing, which is the bearish market. The bearish market, let me hide this first. The bearish market or the downtrend. This means the market is creating lower low, lower high, lower low, lower high, just inverse of the bullish market. This means price is moving down, making lower low, lower highs. Sometimes what we call the pullback is an impulsive move, then a small retracement, then impulsive, small retracement, impulsive, continuously like that. So, yeah, sorry. A bearish market is the inverse or the opposite of the bullish market. So, as the bullish market creates higher highs and higher lows, the bearish market or the downtrend creates lower highs and lower lows. In a downtrend, traders look for sells at lower highs and take profit near lower lows. Sorry. So the main thing is when price trades a lower high like this, Traders usually find a zone where they can sell the market, targeting the lower low. Using either by the way, the market structure is a core pillar of any strategy. Most traders using ICT, SMC, all that, they usually have market structure because market structure is like the backbone of the market. You have to understand the market structure first. So as traders look for sales at the lower highs, they do target the lower lows. I think I'm clear on that. And I know most will say that what if the market is moving rather further and the lower low is a bit close? Sometimes we do use the structure in which I will combine all these in one structure before the end of the session. So now I'll go with the sideways, which is a ranging market. So ranging market, uh, price is not trending up or down. Price is not in an uptrend or a downtrend. Just price is moving on a straight line, like this here. So it is something known as support and resistance. I think it will be one of the topics that we'll be handling every Monday. So support and resistance is just the coming of support. Support means it's a point of support where price is supported. Resistance means price zone where uh, price is resisted to pass. So when price comes to resistance, it is resisted to go back to the support. So price goes to the resistance, support, resistance, support. In short, price is consolidating. That's a ranging market or a sideway market. And usually it is advisable that we don't trade on the resistance or support. The ranging market, sorry, the ranging market, because there are a lot of liquidity or maybe a lot of manipulations whereby the market movers or maybe the big institution place orders just to manipulate small traders. Those are retail traders. Even sometimes they play this game just to manipulate other banks or maybe institutions so that they can fake out and have at least the enough liquidity to buy or sell the market that can break this structure. So it is better often to wait until price breaks out of the range. So like this, let me, now we can go to maybe rather the live charts so that I can show you every, okay, the uptrends, downtrend, the ranging market, and how we can see if the maybe the uptrend market has turned into a bearish market, and the bearish market how it can turn to be a bullish market. So is my screen still visible?
Yes, yes, very
Hello,
visible.
Benji.
Yes.
So first I'll start with the so I'll start with the structure. For example, let's say we are in a bullish market as the structure that I used earlier. I think I'll end it here. as we are in a bullish market creating higher highs and higher lows. Yeah, as the market is creating higher highs and higher low, higher high, higher low, higher high, higher low. So this move in between that causes the market to have, let's say, the going back to the lower low. That move is known as the pullback. Pullback. And the when the high breaks the higher high, this zone is known as the break off structure, usually abbreviated as BOS. Yeah. So breaking of structure. So the pullback move after the higher low breaking the higher high, that's known as the break of structure. So usually, as you can see, also here it will be called or usually, let's say, abbreviated as the break of structure because of this higher low breaking the higher high, that's the break of structure. And in order for a break of structure to be valid, there has to be the higher low must not be broken. If this price, let's say for example, breaks this zone here, this break of structure, that will turn out to be, it might be a liquidity sweep or something, but liquidity will be one of the topics that we'll be handling later. But usually, for a break of structure to work or maybe be perfect, it has the higher low must not break the previous higher low. I think I'm clear on that. So all of these are break of structures. Just break of structure because the higher low has broken the higher high. That means that the structure is continuing on a bullish run. So in order for you to know that the bearish market, in order for you to know that the bullish market has turned into a bearish market, as first, before I combine all this in the live chats, so I'll have to use it as a diagram. Yeah. So in order for you to know that the bullish market has turned into a bearish market, rather, yeah. So price will come, take out. Am I still active?
Very much, very much. Just continue. I will guide you through in case ukikuwa na any hiccups.
Okay. So in order for you to know that the market has turned into a bearish, from a bullish market to a bearish market, something like this will happen. I think I'll do it first. It's enough. So, as you know, this is the high. I'll have to write it down. the higher low has been broken. So when the higher low has been broken, this will cause the market structure to shift from the bullish to the bearish. When the higher low is broken, this will cause the market structure to shift from the bullish market to the bearish market. Usually happens all the time in the market. And this also can be used as your entry confirmation, mostly on lower time frame, because that's what I use actually. So this will be called, usually people call it the market structure shift, change of character, but I'll use the SMC one, which is called usually the CHOCH, whereby this is the change of character. The change of character, whereby we were in a bullish run, the market turned into a bearish after the high low has been broken, creating a lower, lower. Then another lower high, lower low, lower high. So as I stated earlier, we'll be looking for sells after, or maybe when these pullbacks, after the pullback, we look for sell around this zone, going to targeting the lower low. So here, we'll be seeing, let me just type this one. This is the pullback move. So the pullback move happens very slowly. I'll give you another sample that shows these pullback moves and how we configure it in the lower time frame, combining it, using it in the higher time frame as your advantage. So as we shift to the bearish market, you can see we have the that will be called a break of structure. No, sorry, this one here. And also, because I forgot this one. So as price is moving on a downtrend, price had a pullback. Then after the pullback, there was an impulsive move which broke this lower low. When price breaks lower low, this means that the market is continuing on a bearish run. The bearish run is caused by previous or maybe continuous break of structure. Then the market breaks the structure again. Then we have another one here, break of structure. You can see break of structure. But mostly use this in higher time frames so that you can know or maybe if you are a long-term trader, the swing traders, this will be so advantageous on your analysis. If you are a day trader, you can also use it very well. And so the bearish market is caused by break of structures on from the lower low. If the lower low is broken, the market is continuing downward. The lower low is broken, the market continues downward. So we did a change of character here from a bullish to a bearish. Let's now see how the bearish can turn into a bullish. So let's say, for example, this is the low that was made. Price will come and do something like this. Actually, as you can see, this whole structure, this is a SMC draft. All of this is the SMC draft, whereby after the market, it shows that how market flips from maybe a bullish to a bearish, and also a bearish to a bullish. So all you can see here is we also have, what do we call this? It's also a change of character. For the ICT, they call it market structure shift. So here we can also call it the, yeah. I hope you're seeing this, whereby the lower high, or yeah, the lower high is broken, creating a higher high. When the lower high is broken by the previous structure, causing a higher high within this zone, usually the market flips and turns into a bullish market. Now we can turn again, seeing the break of structures. These are the break of structures. Yeah. So, as I mentioned earlier, sometimes when people say, or maybe it is said that, for example, let me use this. These are tool. Maybe when you get an entry here, for example, we look at for entries around the lower highs, as I mentioned earlier. So we usually target there. Usually target the high high. Okay, for me, if I do this, actually it gives me 1 to 3, as you can see here. And that's how it does on the live market for me. But that's when I enter aggressive into the market. But when I use entry confirmation, I get at least a higher risk to reward, and at least the risk is minimal. So you get the entry from the lower, higher low, targeting the higher high. The same way you can get, for example, you get an entry for about, let's say here, at the higher low, you target the lower low. You get the entry at the higher low, then you target the lower low. So that's how the market works actually. You find an entry targeting the next. But on this one, as the market shift, sometimes as you can see, all this, you can target all these highs. If your psychology is well and you can hold, sometimes people do target this previous, maybe higher lows, or sorry, the lower highs. People usually target these ones. So as you're in the market, sometimes you have to be there in the long term. You can use a smaller lot size, maybe that's the least, maybe 0.01, and hold the price. Sometimes it usually goes the way you intend it to go. And it's not all the matter about is being right. It's not all that you can be right. When you analyze the market, trust your analysis, just focus on that analysis. Sometimes you do get signals or maybe something different from what your analysis tells out. Then you try to go find other things, or maybe other, or maybe your mentor told you something. Maybe he's seeing a buy, maybe she is seeing a buy. Then you are seeing a sell. As you enter the buy, maybe of the mentor gave you, you find yourself that the market is going to a sell, and you saw it earlier, but you never trusted your analysis. So this game, you need to trust your own way. But sometimes you accept and learn when you're told something. You just accept, learn, and correct, because repeated mistakes turns to a habit, and it will cost you money. So okay, the thing that I want to do next is show you this pullback that I usually mentioning every time. The market impulsive move pullback, impulsive move pullback. So let me move this down a bit. So in a bullish market, price usually move like this. Bullish run. Then you get like a shift. Storm times. Use this. Then you see another. Okay, let me draw this well. Actually, oops. And another. So what you see here is that so maybe as you can see here is just taken something like from here to here. So this impulsive move, then the pullback. So this is an impulsive move here, then the pullback. So the pullback price usually comes lower highs. It seems like the market structure shift, but or the change of character, but on a lower time frame. You will see price moving slow, having some wicks, small candles around. This is on the pullback. Then when you, as long as maybe, let's say for example, this is the low. This is the low that was created previously, or maybe, how can I call it? Yeah, the low that was created, the higher low that was created previously. Whatever the market does in between this structure, as long as it does not break this low, we are still bullish. Even it cause a market structure shift in between here, cause a break of structure here. As long as it does not break this low that was created previously, the major low. Actually, this is usually it's called the major high and the major low, whereby the major high is the long impulsive move, usually on a higher time frame. Like for me, I usually see it maybe on a 1 hour, maybe 4 hours. Then this pullback, I usually see it maybe on a 30, 15 minutes. So as long as it does not break this low, you're still bullish. You just find a zone, maybe, for example, a supply here, that the market is interested in coming to. Then when price reach the zone, you find a very serious or maybe a very good entry confirmation. You take the buy, target the previous high, which you still make money. And at the same way, let's say this is an impulsive move. You see this is the previous high. Let me get this one to here. Then the previous high, this is the previous low. What is in there? That price has not broken this low. So we are still bullish. What you see, you find maybe because there is a middle, you find maybe it's a fair value gap. It's a fair value gap. Fair value gap is the impulsive move that a gap with not just a gap, an inefficiency, which I think it is part of the topic that we'll discuss. So you find an entry at the maybe price is interested in filling the fair value gap. After it has filled the fair value gap, it has collected filled the inefficiency, and you find an entry confirmation that is literally it fits with the analysis. You find an entry, stop loss just below, then they take profit. Actually, I failed to mention that this tool that I'm using is what we usually use when you're finding an analysis that shows where to buy or where to sell, not where your analysis says states to buy and where it says to sell. So I usually put this so that I know when price comes to this zone, I will buy. My stop loss will be just below here. My entry will be here. Then my take profit will be here. So that's what I always use. So the bearish market is just inverse of this, because actually I can say the time, but I want us to go to the live charts so that I show you the uptrend, downtrend, ranging, and all these that are stated. For example, this is the US 30. Something. This. Okay, as you can see, trying to zoom out, but not working actually. Hey Benji, how do I zoom out on this? Because I'm trying everything, but it's not working.
Zoom out on?
As in, I've zoomed in the screen so much that I can't see the bars outside.
But you can be able to see the bars that are here. What do you want to do?
Okay, I want to see the tools, but I've zoomed so much that I can't see.
Oh,
As
you can see
in,
the
my tools
tools.
are not visible on my screen. So
Oh.
maybe
Mhm.
it's
Yeah, you can use that.
Remove this thing. Still not working.
You can
Right.
decide to stop sharing then share again. Ikisumbua sana.
And even if I share it, it will still be this way. Hey, what's this? What this? Okay, I'll try to explain the usually though I don't see my tools. Okay, I'll stop sharing, then I'll
Yes,
redo it
please.
again. Just a minute. Not, not, no. Love to search the trade view again. Let me share again. Is it back, Benji?
Yes, it's back.
So I was to explain about the higher highs and the higher lows. For example, you can see let's say this is the previous this is a complex one whereby another structure. Let's start from here actually. Then another one, let's say here. I hope it is yes.
Yes, it's okay, it's okay, it's okay.
So as you can see, we had an impulsive move, then a small pullback. The pullback, as I told you, it's usually a small candles with wicks, and the market usually is not easily tradable. If somebody even got a sell here, you see this, we could have taken him out. So it's usually not a very conducive place to trade with. or trade in. So after this impulsive move, you see what? As lower low, lower high, lower low, lower high, lower low, lower high, lower high. Then the market turned into also just playing in between this range, whereby this is our impulsive move. Then this is a pullback. Price, as long as price didn't break this zone, did not come below this zone, we were supposed to look for buys. And as price came back, failed to break this zone also, pretended to buy, but with small candle. This was not also even conducive for one to trade in, because this is a 4-hour chart. So candles like this in a 4-hour chart, that's crazy. So we just look for buys. So this price also failed to break. Here we had a rejection, then price broke this structure. So this here will turn to be our break of structure. Okay, in the diagram that I showed you, it was a bit easier. It was a bit easier because mapping out structures, it's a bit easy. But I think I'll show you something easier on, was it on, say, on the DJPY? I think so. I think here it will be a bit easier until we go to where we are right now. So let's start from here. I want to show the uptrend still, because and this is the lower low that was created previously. So let's start from this structure, whereby this is the highest point that was created. Price came in. Maybe it was coming for another, maybe, let's say, a supply zone, or maybe an order block in here. As I was presenting on that, showing how we were to buy, or maybe when price creates a lower high, that's where we find the buys. So here is where you could have find the buys, because you are literally on an uptrend. So you could have find a buy around this zone, stop loss below, then you target the previous high. You can see price went up to the previous high, then reacted a little, but never came to break this low, went even higher. So what you can do is, this was a small pullback after this reaction, so this will become our, I think we'll use it as the lower low, the lowest zone that price came after coming to this zone. This low is one that broke this high. So this will be our low. You mark out the low, just map out the low. Then the high that was created after this. This was the high that was created. You can see that actually. But sometimes when you're in the live market, you usually could have marked this one, but we'll try to use this one. So as you can see, price broke, then started coming down a bit. Then another break again. So these, take this one. and you see it there. You see there. So this turned out to be our break of structure. This will turn out to be a break of structure. When price broke this structure, it created another high here. So I'll carry this one. Let's see it there. So price here created another high, pull back, another low, then broke this structure, then come back into the structure. So price usually move in that way. Let me go to the daily, it will be seen more clearly. Actually, it's more visible. The mappings that I usually given as an example usually are usually simple than what is presented in the market. Sometimes you can shift them to a line graph and you can see that, but I never use that thing. So you can see an impulsive move from this low. From this low, you can say another one up to this high. So price rallied, head up, small pullback, then rallied. So this is a meaning that when they say just target the previous, maybe if you're an uptrend, previous high, because price sometimes usually come, react from that zone, then shifts can come down here and cause a market structure shift. So targeting even higher because of maybe you are greedy, so it can cost you money. So you can target a zone that price, and it seems so that price can reach on that zone. So let's say, for example, another one, let's say after price reacted from this one, this is like liquidity. You learn about liquidity by the end of maybe this week. So whoever will take you through, or maybe I will explain why price sometimes have this kind of structures like this one here. But also we have a lower low, another break of structure here, then a pullback, another break of structure, which broke this one. So for example, the current running market, which is the live market, we are seeing an impulsive move, then a correctional move. Correctional move is okay, these terms are coming to be many. So the correctional move is the same move as the pullback. The pullback, whereby price comes to fill the inefficiency. See, price came to this fair value gap here and reacted of it, whereby this fair value gap here. Then price reacted of it. But so what we are waiting to see is maybe a price can cause a break of structure around this zone, or can come, break this low, so that we know if the market structure has shifted to bearish, or maybe you are continuing with the buys. When price breaks let's say around this zone, we'll wait for a small pullback, then buys, but we'll be targeting the high that will be created. So okay, that's actually how trading is. Trading is actually boring. For now, you can wait for this setup for around the whole week. Then it happens at night, and you forget, or maybe you miss the trade. But actually, that's the game. Better losing a trade than losing your money or losing the capital. So what? Okay, that's the uptrend. Let me see the downtrend. I think it was on also US 30. Let's see, around US 30. See high highs, high lows, high highs, high lows, high highs, high lows. Simple. Actually, can use this one here so that I explain the change of character. So let's say this was previous high. Then this one was previous, let's see, low. This zone. So as price was buying, it came down for a pullback. Then decided to buy again, but never broke the structure. So what will happen? We wait for either a break on the upside or the downside. This market decided to cause a break on the downside. So it broke the structure, retested a small pullback, then it decided to sell off. So that's what I was explaining on the other pair. That was NZDJPY. So you wait for price to break either the top or the bottom. Wait for a retest or maybe a small pullback. Then you find a zone where you can enter for sales. Then look the market sold off. So that's the shift from the bullish to the bearish. Okay, the structure might not be clear because of the candlestick, and but you have to practice on it on your own so that you understand these things when you see them. Because realization with the market is the best thing you can ever have, and it's more advantageous because once you look at the chart and see, sorry, once you look at the chart and you can see those patterns and everything without problem, without a problem, that will be the best thing that you can ever want in trading. Because sometimes you'll just know where the price is going because you have aligned your mind, or maybe you have seen uh, most of the things that you want to see in the market. Let's hold on a bit. Put this laptop on power for each other. Yeah, so that's actually it. And I'll be explaining about the bearish. The bearish explained it. The noise in the background. So as you can see, I want to explain about the structure shift to the buy side. This market started trading. This will call it a lower high because the market has been started breaking structure to the downside. The market started breaking structure to the downside. So this is a break structure. When price broke this structure, it had a sharp pullback. Then the impulsive move that was caused so that the price to break this low failed. Hey, can you please mute your mic? So when this low, for example, the price failed to break this low, what happened? So you wait for either the previous high and the low to one of it to be broken. So as you can see, price came higher, reacted from this zone a bit, consolidated around this zone. So this is what we call consolidation, by the way. A zone whereby it's not tradable. You can't trade here. Okay. If you are to trade here, you will buy, let's say, here. Where will you target? Nowhere. You can maybe sell here. Where will you target? No. So actually, a consolidation is the worst market that you can trade because the market usually takes everyone out because consolidation is the gathering of liquidity. It gathers the liquidity of buyers and sellers, then market spikes to one intended direction. So as you can see, this is the previous high, the lower high. When market reacted to this zone, around here, a body full, when for a break of structure or maybe a change of character to be valid, you must see a full body candle closure above this line. See, the first one closed below and reacted below. The second reaction reacted below. Then the bearish candle that came after actually came above it, and the bullish one came above it. So this was a clear sign that the market was intending to go to the upside. So we still wait because that's not how we trade on confirmations, not only on we don't trade on maybe gestures or maybe aggressive. Okay, some will say this is because this was a pullback and then this failed to break, so they will call this a market structure shift. But this is on a lower time frame. This is not on a lower time frame, but still within this range. Okay, let me just type the change of character because this will confuse many. Change of character. Some will say this is a change of character, but it's in within this range, this high and this low. So I'll not consider this. For me, I'll not consider this as the change of character. But it gives more confidence that this market might shift because it failed to break this low. So what we'll do, we'll wait for a reaction. After this market breaks here with a full body closure candle, this blue candle here, you can see price rallied up, and then we had a small pullback, which now there is where we could have gotten the buys from of this it's a Marabuzi candle, but we'll just mark the fair value gap. Just mark the fair value gap. So price reacted on the fair value gap and gave you time for an entry confirmation. So if you could have got this trade, now you know the market has shifted from bearish to bullish. What you do, you find an entry after seeing the confirmation that we have a major change of character here. Then reaction, maybe you see a sell, then a reaction at the fair value gap. So this actually is an entry confirmation, which is a bullish engulfing candle. Bullish engulfing candle, we have the bearish and the bullish one, but the bullish one is engulfing the bearish. But you have to wait for me, I usually have at least 3 confirmations so that market so that I enter or press the buy or sell button. So you can see when price consolidated a bit, but you see we had the change of character. So it was still a bullish confirmation. the bullish, the change of character, the reaction from the fair value gap. So this was a clear confirmation that the market was intended on going up. Maybe you could have gotten it above the zone, targeted the high, then your stop loss just below. So, and you could have gotten this. And remember, this is a 4-hour chart whereby you have around 1, 2, 3, 4 candles. 4 candles on a 4-hour, that's around 16 hours. So holding a trade for 16 hours and getting it right for a full 4 hours. My brothers, sisters, dad, aunties were here. Actually, that's massive. For 16 hours holding trade, that's when you enter and risk well, you know what you're risking and know what you want to get, or maybe rather the profits are actually massive. Only this trade can take you to Dubai. Benji can tell you that. Only this trade, one trade, when you have a large account, risking it well, using proper risk management, this trade can take you places. Just a matter of patience. Yes, you missed this one. And what if you could have gotten this one and took you out? You could have written an SL, but you waited patiently and got this one. Just a small one, but massive. So you can see from there, the price started going, creating higher highs, higher lows, higher highs, higher lows, maybe bigger high, higher low, another higher high, higher low, higher high, higher low. So as you can see, it really works very well, whereby as long as you know the market shifting from bearish to bullish, you know the bullish from the, you know the market if it's from bearish to bullish, bullish to bearish. You just understand that, and it will be a plus on how you analyze the market. Making it, mixing it with the other confluences, it will be, at least it will increase your win rate. Because once you understand the market structure, it will be very well. So I haven't shown the consolidation part, which is, okay, the consolidation is usually, for example, I can do it here. It's below. Let's use this one first. Let's say, for example, this is a support, the resistance, and this is the support. So don't worry, guys, if I'm missing some things out. I'm doing it often. I'm trying to see even some where I am right now. They say that I am right now, if I can teach all this. So I'm doing it often. If I miss some things, don't worry. We'll cover it more in the next classes, or maybe I'll remember it before the class ends. So price comes from there. We'll use this one as the support. The price comes to the resistance, bounces back, comes to the support again, back again, support, resistance, support. So price is consolidating from support to resistance, support to resistance. Usually some will say I will sell from here to here and then buy from here to here. Which you never know the time the market wants to break out. Excuse, somebody has muted his mic. Okay, so price reacts from support to resistance to support, resistance, support to resistance. The same way. Some will say I'll sell from maybe the support, the resistance to support. I'll buy from support to resistance, but you never know when the market will react. Actually, I've seen the message. I'll reply just a bit. So you'll see mostly, you never know when the price will break out. It may break out from the upside. Sorry. Or the downside. You never know. So maybe the time that you're placing that buy button, then the market usually maybe the market now decides to sell, and you enter the buy targeting here. Then the market breaks the structure, goes down. So what you usually look for is a break, clear break of this structure, taking out all the liquidity. Then you see a retest. After breaking it, you see a retest. So we'll enter the retest, targeting even higher zones. On the sells, we wait a clean break with a candle body closure, the same a candle body closure, then a retest. Then you see we get the sells targeting even lower. So I think I had a zone here. Seems I've got where I marked it. Find it. Let's try to find it a zone that has consolidated. Actually, I'm not seeing any on this. Yeah, let's try to see it on maybe the NAS 100. I want to show you consolidation. Actually, see, it won't be accurate actually, the way I mapped out the structure. So usually it's not accurate. The same way I've drawn with the straight lines is usually just to show you what can happen in the market. You can see this zone here. Price is reacting within this zone. Sells, buy, sell, buy, sell, buy, sell, buy. See, it's consolidating. Trading this market around this zone is very risky because see the wicks. The wicks are big. You might enter the buy here, targeting this high, then the market sells, take you out, and maybe break even if you ahead that one. If you risk a lot, the account is blown. So you wait for a break. See this candle, the red candle here, broke with a full body. This one swept, then this one broke with a full body. See the sell off. Then you wait for a small pullback. So the pullback happened very well. Then you find maybe an order block, a fair value gap, mitigation block, all that. After it has all happened, you find the zone that you are willing to enter. When price get back in there, you enter. Let's say these are for the sells. You enter the sell here. Maybe you decided stop loss above. Using previous structure, maybe you wanted to target this zone here, because as I mentioned in the first diagram that I shown earlier. See, this is just you will just be in profit, zero drawdown. When you get this one, market will never come back in, just sell off to your full TP. Mostly it's just a matter of patience. After the consolidation, wait for a breakout, just wait for the pullback move or the retest, then find an entry, target the lower low. If it's the upper side, you just do the inverse of this. You wait for a maybe you wait for a break. Wait for a break around this zone, retest, then target zones. That's the consolidation market. I don't know if I'm missing something out, but if there is any question, you can ask. Oh, Benji, am I leaving something out?
You're okay, you're okay, you're okay. I'll do a summary about everything. Don't worry.
Okay. So if there is any question, you can ask me. I'll try to. I see there is no question actually. To sum up everything that I've been talking about, just a matter of understanding how the market moves. As long as advise the beginners, try to map out this structure alone. Just try to draw higher highs, higher lows. When price breaks this, a change of character. Just doing it out with lines, not in the charts. Doing it out with lines, understanding why I did this, and why it is, and how did I know this is a change of character? How did I know this is a break of structure? Just understand this. Once you understand this, you try going back to the charts, identifying the break of structures, identifying the change of characters, identify the higher highs, higher lows, lower highs, lower lows. Once you understand that, I guarantee you that you're one step away from most of the beginners actually. Utakuwa umetoka to that point of being a beginner on your way to an advanced trader. Not yet advanced, but you're not that completely beginner. Just this one. Understanding the pullback move. Pullback move are small moves that maybe happens after an impulsive move causing the higher highs, causing the lower lows on a lower time frame. Or understanding this one, just this. And knowing where to trade actually. Knowing where to trade, what markets to avoid, and also knowing what time to trade. That will be a topic for another day. That will be price and time. But knowing at what time market does this, at what time is it suitable for one to trade? At what time do market cause impulsive move? At what time do market cause the pullbacks? Understanding that will be easier, and you'll be far away from beginner, just you'll be an advanced trader. Knowing the time, knowing market structure, and understanding how the price moves. Other confluences will be added to you, and really thank you for. I know this video will be on YouTube. I'll tell people that you'll be watching out there. Subscribe to the YouTube channel, and like the video, share the video to your friends, everybody. and you are in these live classes, and you have been from the minute I started to now. Congrats, you have been excellent, and I really thank that you never left the meeting, and you. I really just thank you. That's all. I think Benji, you can take over.
Thank you so much. Thank you so much, Dean. A round of applause for Dean Tafadhali. I guess this is first session he has done for over 1 hour. Congratulations. Please, if you're in the meeting and you can hear me and you've been following through, Dean, please tumpe hizo reactions zake, tumpe his flowers, tumpe makofi yake, because it has been a long session on market structure. He has confidently done a good thing, especially hapo kwa market structure, and we have been able to learn a lot. Okay, we've been able to learn a lot. I hope you guys can see my screen and it's visible. So the first thing that we have been able to understand is about the market structure. This is the most basic. Okay, this is the most basic of understanding that you need to know and understand, because if you don't know the direction of the market and your work is just to hit the buy and the sell button, then that's equivalent of gambling. So wewe na mtu wa SportPesa na Vieta, you are the same. Okay, but having that knowledge and understanding that this market is bullish and I'm supposed to look for buys, then that now becomes not gambling, but now that's become a skill. Then the market is bearish. Now I'm supposed to look for what? For sales. We understand that if the market is also bullish, you can look for pullbacks and also look for sales, but that's an advanced way of trading. Okay, so Dean, big ups. He has been able to share with you the market structure. All right, types of market structures that we have: bullish, bearish, and also we have sideways. Okay, in a bullish market, which is an uptrend, you look for buys. In a bearish market, which is market is going down, we look for sells. In a sideways or a ranging market, we just wait for breakout. Simple as that. We've been able to understand higher highs and higher lows, lower lows and lower highs. Whenever the market is on a bullish run, it creates high highs and higher lows. Whenever the market is on a bearish run, it creates lower lows and lower highs. And we've been able to understand break of structure, change of characters. Then we have been able to understand also pullbacks and reversals. Very important. All right. Then we're going to learn more about internal and external market structures. There's a way that we usually have internal structures, internal break of structure, and external break of structures. What we call IBOS and EBOS. All right. And then later on, we'll be able to do what we call higher time frame buyers, and then lower time frame execution. How we usually look at probably higher time frame H4, we come all the way down to probably M15. Then we can take a trade on M1. All right. So we're going to be checking on those kind of higher time frame buyers, then lower time frame execution, then chart practical examples. Dean as well presented his screen and shown you how the market has been. This is just an example. This is AUD USD. Okay, and this is just an example of a trade that Dean was trying to explain. Okay, so this market has been creating break of structures. Okay, so ikafika somewhere there, then started dropping. Okay, so my work was so simple, was to look for demand area from around this particular area. Okay, then once the market hits this our demand area, the market has to give us some good signs. Once it gives us some good signs, then we can be able to get in. And where can we target? We can be able to target this high that was created here. Remember, the market is on a higher high, higher low. This high is what we usually call a weak high. So high iko hapa, this is a weak high. Let me just address this. Probably this is something that we were not, it was not explained well. This is a weak high. Why is it a weak high? Okay, it's because it's going to be taken out. All right. Then we have, this is going to be our strong internal or our strong low. So this is going to be our low. So that low is a low that we expect the market to hold. Okay. Sometimes you usually call it strong low or a strong internal. This is a weak high or a weak internal. Either way that we're going to call it. So it's the same thing. Okay. So this here we're having is a break of structure. Okay. You might even have another break of structure where the market has created another break of structure, okay? Probably even an internal, okay? Then here is where we're having the pullback move, okay? Or the change of character somewhere here, okay? Well, let me just put it the rightful way, which is around this area. This is now the change of character or the CHOCH. For us as ICT, we usually call it market structure shifts. All right, bear with me. Others also ICT, they usually call it CSID, change in state of delivery. Then another break of structure. Okay. This is boss. Okay. So this here is an external break of structure. This is an internal break of structure. Okay. But on the opposite side, this is an internal. This is an external break of structure. This is an internal break of structure. I hope you guys are getting it. Then from here, we usually wait for what we call confirmations. Hapa sasa ndo tunakujanga confirmations from this particular area. Okay, and those confirmations niliwapeanga. Confirmations can be can be weeks. Okay. Confirmation can be with the long. Confirmations can be CRT. Confirmations also can be bullish engulfing candles. Okay, all those. Then once we have the right confirmations, then you get in, have your stop loss at a low, then put your TP at this week high. Okay, but any high that has been left behind, probably like this high, this is also a TP that you can have. So those are weak internal structures which are going to be taken out, and those are what we usually call liquidity, and a type of liquidity that is called buy side liquidity, where the market is supposed to target. Sawa. And this kind of an example is what we're having here. Okay, the market created a break of structure, another break of structure. This is where the original area started. Okay, so this is going to be our demand. Okay, market has respected this particular area, and the market now is moving higher, and we're expecting this market with some little patience, the market is supposed to go all the way up. All right, so this is the low that the market created. Push, low, another push, another break of structure, which is around here, as you can see we're having. Then this was the last low that was left out, so this is where we are having our change of character. Okay, let me just call it a change of character, a CHOCH. All right, then this is an internal break of structure, which is here, an internal break of structure. I usually don't mark them, all of them, because I usually know whatever it is. Then the market has been pulling back all the way down. Okay, so imefika hapa, we have received some good reactions, which is H1, what we call H1 rejections. Okay, so this is going to be a very slow trade. This is AUD USD. Kesho tuko na news AUD. Probably it might push AUD more tomorrow at around 6:30 a.m. So this is what might push, and also at 6:30 p.m. we're having ISM manufacturing PMI. So either of the two can push the AUD, okay, to go much higher. All right, and I'm not here to talk about gold and also analyze the market. We have not done that. So this is just an example of how the market, this is a basic market structure. Okay, demand and supply, and also checking the break, if the market is getting higher highs and higher lows, and where to target, where to put your traps, which is these demands, and also where also to set this kind of trap. So this is a trap also, but this is a smart money trap. We usually call it a smart money trap. It's an advanced concept. I usually call it this way because this is to induce early buyers to get here mapema. As you can see, the market was heading higher, but ilikuja and it broke all this. So this is liquidity for us. Okay, then the market has come back here. So I'm expecting the H1 to close some little bit bullish. I'm not expecting this kind of wicks from here. Okay, if it closes bullish and a strong bullish engulfing candle, then I'll be sure now this market is going to rally all the way above. Okay, so this is a live trade, and I've told you, and I've also posted it in the private VIP community. You guys can join in the trade. Haiko mbali sana, it's just a trading around our entry. Put your stop loss below the low, okay, and hold it. All right, it can be a very good trade on Monday to start the week. Sawa. So tuko na maswali yoyote guys?
Do you have any questions? I don't believe so. We usually use the chats to have to ask questions, but I'm seeing there are no questions. So I believe everyone is good and is okay. So I don't want to go and analyze gold. I'll share the setups later on during New York session. Gold is very volatile currently this morning. I woke up in the morning, I was looking for buys. Now, thank you so much, guys. Let me now finish recording so that we can talk more about other stuffs. Thank you and have yourself a good day.